You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan. Welcome to Masters in Trading Live. Today we're going to talk about a very important concept. We're going to talk about deltas. Delta. Fall in love with it. Make sure you understand deltas. By the end of this presentation, you will understand everything that you need to know about deltas, what it means, why we care, and why it's so freaking important. Super excited to announce this Monday is going to be Profit Surge. It's my first major webinar of 2025. You guys can sign up investorplace.com/Profit Surge. As soon as you signed up, you guys are going to get a whole bunch of trades coming your way. So please make sure you're signed up. The big day is Monday. It's at 1 o'clock Eastern, and it's a presentation that I've been working on for about 6 months. Super excited about it. All right, we're going to go over to the slide deck. Let's have some fun. I'm looking forward to today's show. Here it is, Profit Surge. Make sure you sign up. Attaboy, Jack. Thank you very much. I appreciate that. Jack's getting addicted to the daily show. I appreciate that. Get you, Jack, are you in the Discord? We got to get you in the Discord, my friend. Make sure you guys are signed up. Profit Surge 2025. You guys will get a ton of free trades. It doesn't cost anything to join the program. So let's do it. Nice. Jack, awesome. So yesterday, I posted this in our Discord. We have a community. The community is, so I'm available to communicate with the room. That's really it's a place where I could easily share my research. So yesterday, midday, I put in that we should hold off buying deltas. And this is what I want to go over today, exactly what that means. I want to teach you how you can control your deltas. Now, what this is here, VIX 1 year. We often follow the VIX 30 day, That's the fear index. Well, we could also follow the VIX in different time frames. This time frame is 1 year, but the concern is that it's spiking. We don't really want to see a 1 year risk measure spiking. So that's why I put this yesterday. This movement is extremely concerning, right? Well, VIX, this is what the VIX 1 year looks like today, right when I got on. Let me go and look at it where we are right now. This is an issue. This is a major issue. And when I see something like this that I haven't seen in a little bit, I am concerned. So as long as VIX, I keep saying VIX, so I say VIX. As long as this continues to rally, it's a problem. The market is not going to go down if the 1 year VIX is taking out these little highs. It's just not going to happen. So be careful. Watch your 1 year VIX. It's spiking right now. So I am concerned with the downside. That's why I said in my room, guys, until this settles down, we are going to hold off buying deltas. Now I'm going to explain to you what exactly that means. And let's use Rigetti. Here's your delta. Any option chain, you can look at delta. Delta, you can look at it as the probability that a strike ends up in the money. Okay? So the 35 strike, the market is saying it's got a 54% chance of being in the money. The 38 strike, the market's saying it's got a 46% chance of being in the money. That's a cheat sheet that you guys can use to follow delta. But now let's walk you through exactly what delta is. Delta, how much an option acts like stock. So a delta of 1 If an option has a delta of 1, it's just stock. There's no difference between that option and stock. So look, if I pull up, let's look at Snap. If I pull up Snap, you see these 5 strikes have a delta of 1. It's just stock. You can buy the 5 strike and it's just stock. These 5s are valued at $3. The stock's at 8. The 5, it's got a 1 delta. So these are worth $3. That's why the market makers are willing to buy it for $2.40 and sell it for $3.40, because they have all that edge because it's worth $3. So watch. If a delta has 0.5, your at the money deltas are going to be 0.5. It's got a 50-50 probability of being in the money. Your out of the money might have a delta of 30. It's got a 30% chance of being in the money. Why? Because it's out of the money right now. So a delta shows your stock exposure when trading options. So when I put in our Discord room, hey guys, let's be careful. That 1 year is spiking. Let's not add long deltas. What does that mean? It means let's not do another trade where you're buying stock, you're buying calls, you're just adding deltas. Deltas are the lowest common denominator of your position. So stock versus option example. If you buy 100 shares of stock, your delta is 1, right? If you buy 10 calls with a 0.3 delta, you're going to have 300 deltas. So here you have long 1,000 deltas because you bought 10, or if you, actually, no, it's 100. But by 10 call options, 10 times 3, it's just like being long 300 shares. You're not long 1,000 shares. You're long 300 with leverage and with time decay. Here's a cheat sheet. Think of delta as the probability your option finishes in the money. It's not exact, but it's close enough. So you could always think of delta as the probability that your stock ends up in the money. What's up, Riz? Let's walk through that. Can we also say if a stock go, okay, so right here, the delta of these 8s is 0.57. So that means if there's a $1 move in the underlying, these options will be up 57 cents. So if Snap goes from 809 to 909, these are going to be worth $1 because it's got a 0.57 delta. Riz, does that make sense? It's kind of like the next level off of this. But if the market moves $1, when the delta is $1, those options are going to move $1 because they're just stock. But if you go way, way, way out, yeah, cool. Good question, Riz. If we go way, way out to March, 133 days, stock's at 809. If it goes up $1, these 20s are only going to go up 6 cents. Why? It doesn't have a lot of oomph. It doesn't have a lot of gamma. It doesn't have a lot of gamma. So when this moves, it's only going to move 6 cents. Here's a fun question. If that doesn't have a lot of gamma, what's the opposite of gamma? What's the opposite of gamma? So if that option doesn't have a lot, attaboy, John. If that option doesn't have a lot of gamma, it doesn't have theta either. That's why your theta of the at the money is going to be the most. That's where your gamma is the most. So that's a really, really big lesson for people once it kicks in. Gamma is the opposite of theta. They are direct opposites. So just like your theta gets crushed the closer that you get to expiration, your gamma is going to spike. It's pretty cool. I love that lesson. So again, let's go gamma 0.10, 10% chance the option expires in the money. Option 0.30, a 30% chance. 50, it's a 50-50 bet. So when you pull up any option, and I'll pull up an option on anything here. Let's pull up an option on GCT, which is a name that we have for our earnings. You'll see the at the money options have a delta of 0.50. 32.20, we don't really have anything at the money right here because there's no 32.50 strike. But look, the 35s have a 46% probability of being in the money. The 25s or the 30s have a 35% probability of being in the money. Why am I saying gamma instead of delta? The opposite of theta is gamma. I don't mean delta. The opposite of theta is gamma. So see? A couple of weird comments, but why am I saying gamma instead of delta? Because I'm saying the correct thing. And Aaron, I'm saying the correct thing as well. The opposite of theta is gamma, not delta. That makes sense, guys? Everyone following along, the importance of delta. More positive deltas, more bullish, right? More negative deltas. If you want negative deltas, more bearish. How about this? Let's do this, guys. How can we how can we buy deltas? How can we buy deltas? I'll go first. 1, buy stock. How else can we buy deltas? CBJ, this is your fourth comment that is really weird. 0.10 is 10% chance the option expires in the money. Okay? So how can we buy deltas? CBJ, answer this one. How can we buy deltas? Buy stock. I like that. We can buy calls. How else? We can't buy puts. If you buy puts, you're going to be short deltas. How can we buy deltas? Okay, buy stock, buy calls. How else? You could sell puts. Okay? These are all different ways that you can get long deltas, right? How about a bullish call spread? Strangles is not. Strangles is putting you delta neutral. Okay? Strangles are not. How about this, guys? The most important thing for traders, bear put spread. But we need a bullish put spread to get long deltas. The place where people make the biggest mistakes in investing, and this is true. A lot of people will just buy stock. And they think a stock's going to go up, so they'll buy stock. But that might not be the best way to express an opinion, because maybe that stock goes higher, but volatility comes out of the market. Maybe the stock goes higher and volatility is put into the market. So what we need to do is, if we want to be long volatility, you would buy calls. If you want to be short volatility, you could sell puts or you could buy stock. It all comes down to learning the most efficient way to express your opinion. That is where I see the biggest growth for traders. Being able to control your deltas, being able to get long volatility or short volatility, and these are all places where we can help. Finally, I got a great image submission from one of our members, John, and I wanted to share this because he nailed a great learning lesson that I'm always sharing. We don't want to be long those December options because they're going to melt like ice cream. So John, thanks for sharing this. This is December options. Guys, make sure you're signed up. investorplace.com/profit surge 2025. We got the event coming on Monday. Make sure everybody's signed up. I can't wait for the event. Super excited. Everybody have a lovely weekend. Everybody in All Access, you guys sit tight. We're going to go over some of our open positions. Thanks everybody for watching. If I can figure out how to get out of here, I'm going to leave. All right. Ciao, ciao.